Righto, back once again. Let's just make this thing here a little bit smaller. Right, okay, fine, that looks better. Okay, let's look at the Ichimoku breakout EA. As it says, it's a breakout EA. It trades the breakout of the Ichimoku cloud. Yeah, you can see I've got the basic Ichimoku cloud on the screen with just the Ichimoku line. I've taken all the other lines off, the Kijun line, sorry. As you can see in the text example, we've got the exact same examples over here. This system is based on the breakout of the cloud, as you can see over here. We had a close, which was that candle over there, which is above the bottom line of the cloud. And then the next candle, we had a close below the bottom, which is in the breakout. The Kijun line is forming the support. Price is below the support, so it is a very good entry for a short signal. So in the opening of this candle, it'll place an order to sell, and it'll sell on the opening of that candle over there. Your stop loss 140, take profit 120 or 160, up to you. The only difference being, should you set the target to 160, your consecutive losses could add up considerably. Where on a 120 take profit, you seem to get out of your trades a lot faster. You could have maybe, let's say, 6 consecutive losses in a row. Where if you go to a 160 take profit, you could have up to 10 consecutive losses. Now this trade here was a perfect one that you will get out of the trade in your very first trade. Let's go down here, let's go and look over here. Right, here we've got another one, another example here. We have a close inside the candle, inside the cloud, and a close outside the cloud. So on the opening of this candle over here, we would place a trade, right? Because we had a close outside. So the opening, we place a trade. We didn't get our target. Okay, up to now, it hasn't yet gone anywhere. It could still go somewhere, we do not know. But it comes down and it hits you on your stop loss. Now, that's loss number 1. Let's look at how, now the system, all right, let's first try and explain it like this. The system will now wait for the next trade, the next signal. It will not start trading again until you have the next breakout. So now, based on that over there, let's go and have a look how the system actually works. Where am I? Not there, no, it's not that one there. I'm going to pause the video, let me just find the spreadsheet and I will show you. Righto, yeah, I have made a small spreadsheet to explain as we're going along. If we look at the calculator over here, where am I? Let me just go pull this over a little bit. Right, you can see this is very conservative trading, but on a $500 account, I would prefer to do it onto a $1,000 account to reduce your risk. Anyhow, let's look at it. We're working on 120 per take profit. It's a 40 stop loss plus a 3 for your spread. So, yeah, we're looking at the lots that we'll be trading for every trade. So on the first trade, we are trading, let's say, 1 lot. We hit a stop loss that we can see over here. Maybe let's just try and bring this maybe in a little bit. Right, yes. Right. So in the first trade, we are going to trade, our potential profit is 120 pips, as I've marked it over here. Potential profit is 120. Our first trade, we hit a stop minus 40. Right, so our total is minus 40. We have got 80 pips still in the pocket on a potential win. Second trade, we hit a stop loss once again. So now we've lost a total of 80 pips. Our potential profit on a win now would be 40 pips. Now, normally at this stage, I would start to increase already, but to make the money management better and to reduce your risk, total risk over here, we'll go for the third trade. On the third trade will also be 1 lot again. So we'll hit a stop loss once again. So this is now 3 140 losses already, which is 120 pips down. Our potential profit on this run so far is 0. Now let's say on trade 4. We trade to the 4th trade and we hit the target, 120 pips. 120 times 2, because we have increased the lots on the 4th trade, we have increased the lots up to 2 times. So it's 120 times 2, which is 240, minus the 120, which we have lost. So our profit is 120 once again. But now, this cycle will start repeating itself now. And it'll repeat itself 12 times. That's going to repeat itself all the way down. So this is basically how I have calculated my lots out over here. And that is to get it to try and manage that you will minimize your losses and still make some profit on your trades, but at the same time to try and protect your capital, that we are not going to wipe the account. Let's say things go totally wrong. I've never seen it yet, up to 12 losses, consecutive losses, but at the 12th consecutive loss, due to the fact that the margin is starting to get very high, I've decided to stop at the 12th trade. So then you're just going to leave it. Whatever comes, comes. If it's a take profit or a stop loss, it doesn't matter. Whatever comes, comes. That's it. So let's say we're going to hit our take profit. We should still lose at least only $7. Or 7 pips, sorry, because this is pips. We should only lose about 7.5 or 7 3/4, about 8 pips that we're going to be losing on the trade. The total loss, if we hit the stop loss, is going to be around about 25 pips, plus of course this one over here, 25 pips. It's going to be our total loss maybe. So yes, you're trying to protect the system all the way, because at least on this manner over here, you're not going to wipe your account. You won't get what they call a margin call and lose your margin as well. At least this way, you're going to protect your margin, you're going to protect your capital, and you're minimizing the amount of pips you can lose totally. You will not wipe your account. That's the main thing about the whole system that I've tried to do over here, is to protect your capital from wiping your account. I've had too many systems that I've bought. You put the EA on your account, it trades very nicely, it makes mega profits for the first month. One morning you wake up, switch your computer on, and it's wiped your account out for you. I'm not in for that. And that is mainly because when you are really doing martingale trading, that kind of thing happens with you. And that's why I have tried to protect my capital as much as possible, because I have wiped the account using martingale trading systems not just once but many times. And then I eventually sat down and I spent a very long time trying to figure it out. How can I do this? And then I saw a couple of other EAs that are very similar to this, but they also, how must I put it to you, need really a big account to try and run it. So my problem was now to try and bridge that, where you don't have to have $10,000 or whatever the case might be to run the EA. I wanted it to run on a small balance of, let's say, $500 to $1,000. This one you can run on $500. You can see over here, your maximum on trade 12 will be 450 for your margin, and maybe for your loss over here, you could still maybe, if you do hit the maximum loss, okay, sure, you'll at least just lose that there. You'll get your margin back again. So you'll maybe be $50 or $80 down maximum on this loss over here, not your total account. And that's what I've tried to achieve over here. And I must say, the EA is running really very good. Between the Bollinger Band and the Recovery EA, this month, October 2019, the account, my two accounts together, is up about 17%. Later on, I will link the accounts to my FX book, and you can see for yourself more or less how the accounts are performing. And also, I will put them up onto the MetaTrader store, where you can rent them per month. And once you're renting them and you have a problem, you'll be welcome to contact me, and I'll give you all the support I can possibly give you. Righto. Now, with that said, the Ichimoku breakout is the Ichimoku trading system on its own is a very powerful indicator. If used correctly, I am sure you could make money just using the Ichimoku without even bothering about any other system. If you know how to trade the Ichimoku and how to use it, it was originally designed by some guy in Japan. The word Ichimoku means one glance. You must be able to look at the charts in one glance, see what is going on in the market. And you can do that with the Ichimoku. The Ichimoku is actually a very, very good indicator. Most probably one of the best. later on more about indicators. When we get to the day trending system, I will show you one of the indicators that I've been using for quite some time. I bought it and I've been using it for quite some time. It's a very good indicator. We'll get back to that at a later stage. Now, happy trading.